All right, guys, we're going to do a quick Sunday video today from Nassau, Bahamas. I was going to do it outside, but I don't think it's going to work. It's just going to be a black, pretty much silhouette of me with this beautiful background. But we'll have some photos for you of the week. And it was a great week to relax. We had some of the best weather that we've ever had. Usually when I come out, I get some type of cold front, and it's 68 to 70, 72, which is obviously better than home. But this week we were all in the 80s, which is unbelievable. So it made for nice beach days, swimming, boat days, you name it. So I am excited to be back on desk tomorrow. Yes, I had a lot of FOMO. Yes, I was super anxious. As planned, I did stay involved with the market to kind of get a feel for how things were acting, how they were opening, how they were closing. But for the most part, middays or the full day, I took off. I traded some F and TQQQ and BBIG. BBIG we went over last week. We talked about the 455 parabolic as an ideal type of trade. Don't try to figure out the top, but once it peaks, don't underestimate how far and how long it can unwind. So pretty clean trade each and every single day just to kind of put some on into strength and a nice unwind from there. So that worked out extremely well. TQQQ offered some nice rallies, and especially on Friday where it had the flush off the open, which was the goal, and then it goes all the way back to red to green, but it didn't stop there. You either have, maybe sometimes it consolidates and continues to go, or in this case, completely unwound. And that's a trader's market. So if you're trying to pick bottoms and trying to figure things out as to what they're going to do next week, it's just a waste of time. You're either going to be right or wrong. Good luck. That's not the time to make those decisions right now. Yes, you could buy into panic and maybe it works out, but for most people, speculation might be on hold. And, you've seen that with swings. A lot of them are just kind of continually melting. There's not much liquidity. Liquidity comes and goes extremely quickly in small caps. So you saw with BBIG, all the volume comes in, squeezes, and starts to come out. You saw that with DATS, DATS. We talked about this in the 11, 12, 13 range when it was getting, completely promoted, like buyouts and this and that, which was all, obviously fictitious. But, it's a shell. At the end of the day, it's a shell. It's a company, but it's an excuse to be public to sell paper, right? They're going to sell more paper than they ever would likely in revenues, and it's going to end up turning into another company, and that's just the day and age that we're in. That's the same thing with SPACs. We've got all this huge flood of SPACs out there. You see SPCE, you see DraftKings, you see all these other names that are just completely unwinding, and even QS and RMO, a few of those other automotive type of names. They all wanted to get public to take advantage of this hot time, and DWAC is a perfect example of that. DWAC, where I was thinking that we might kind of run into the February 21st, and we had that huge move. Had two great shorts, Thursday and Friday. Fantastic trade plan on scanned Thursday to short into the 82-83 push for a potential unwind on DWAC, but I'm thinking that, based on how the market is right now, I'm not sure that there's enough speculation to really hold this trend going on DWAC. So I'm going to be interested to see how this unwinds, but I wouldn't be surprised to see all big pops get sold off and continue on, back to where it came from, 40s, 30s, and lower. So we'll see. Obviously, I'm not going to hold that long. I'm not going to be, I'm just going to be looking for the opportunity each and every single day. If it's got it, great. If not, I'll find another name. A couple notes for today. I guess we've talked about, one day it will matter, right? We've talked about the AMC crowd, the GME crowd. All these other thin IPOs, right? AI, CYN, they're all down 60%. DraftKings down, I don't even know what, 60, 70, 80%. But people are getting absolutely murdered in the market. And it's because they don't have any risk management. They don't know what they're doing. But it hasn't mattered. right? It hasn't mattered for ages, and it's paid them well. They were rewarded for reckless decisions. And we've talked about this for a long time, that at some point it will catch up, and it finally has. And maybe they still get some good money, but knowing, how I learn, knowing how most people learn, you're going to start to add to those positions and make really, really bad decisions because it worked before. You're going to have that rally on DATs, for example, right? So now you average down from 10, you see it going from, 2 to 3, 4, and you're like, all right, finally, it's going to go. So you add, and then bam, 2 days later, it's down 50% again. And that's sort of, the process that everybody has to kind of go through and learn. And I do think that you need to actually go through that and learn it yourself, because, unless you listen to other traders who have been there, and you can avoid it. And, unfortunately, most will not avoid it. And I still do think that a lot of traders do need to learn it firsthand themselves. Otherwise, they're not going to be able to know, what to do when those choppy waters kind of come. Let trends confirm. Let trends, reverse and start to prove that they're going to continue to head higher. You don't need to be adding and adding and adding and adding, because that's what most people are doing. They're continually adding into a loser. They're going to end up getting, kind of blown out. This whole market kind of meltdown is going to be a result of people taking off stocks because they're forced to. Margin selling, panic. And in my opinion, we haven't really seen too much panic yet. Never underestimate the bear market rally. While I don't think we're just going to rally right back up, there can be the short-term moves where it ramps up, consolidates, ramps up again, because most people are not short sellers. I would argue probably 99% of people are long biased only, right? Maybe even higher. There's only a small group of short sellers. Otherwise, the sellers are margin sellers and people in panic. So when that stops, all you have is buyers, you have covers, and that's it. So things are very, very thin. And so just be aware of that, especially when sizing and scaling and adding has worked really well, and you're being rewarded for it. Just be aware that when things shift for even a day or two, you can still lose your shirt if you're oversized in the wrong name. So keep that in mind, and always recheck in and make sure that you're, obeying proper risk, and you're not just trading 50 or 100 or 200,000 shares or whatever it may be in a name because you could yesterday. Each day is different. Each day is going to have a different kind of set of liquidity parameters, or whatever you want to call it. Just make sure that you're always in tune with that. Let's see, other notes. Never scale beyond comfortable risk. No trade is okay too. So a lot of you still want to force a trade. You want to make that trade, and a lot of times you could just avoid it. Wait for the waters to settle a little bit. No trade is a good trade, and cash is a position too. While I may not be going that route, I do that off of open and pre-market, and I sit on my hands in cash waiting for an edge to present itself to me. So although I may appear active and I may be trading a lot, I am waiting for those spots, and I think that's the most important part. And then last couple things. One, obviously have an imagination, like we talk about. We're in a very unique time right now, and completely unwinding, and there can be a lot bigger unwinds than you expect. So just be prepared for it. Slow selling can remain a lot longer than you think. The panic is what gets everybody out, and then it kind of ramp it back up, and then maybe a short-term base. But the slow selling, the constant rally, fail, rally, fail, rally, fail, that can remain because it keeps people in and comfortable, maybe adding, and then as it continues to go lower, pressure points are pushed, and bam, margin selling comes out. And the last point that I had today was to stop making excuses. We can all find a million reasons why a trade isn't working, but right now it just comes down to risk management and whether you know how to trade or not. It's not about, well, it worked before, I made a whole bunch of money before. It's not about any of that, because what worked before was reckless decisions, and most traders were rewarded for them. AMC, GME, and all that kind of stuff, that's not how the market works. And over time, the market always figures itself out, right? And you have to understand that. It's not an us versus them. It's all supply and demand. And, there's a lot of people that are going to lose a lot of money. But unless you're actually honest with yourself and why the trade did not work out, why you made a bad decision, why, that all these reckless decisions kind of finally came to a head. Unless you admit that, you will not succeed as a trader. So I think that's important, and a lot of people will disagree with that. A lot of people will not admit that. A lot of people always have a reason right away. This is why it didn't work out, right? Oh, that would have worked, but the market came in. The market's not the excuse. It's the type of market that we're in right now. Accept it, and if you don't, it is what it is. All right, let's get into a scan for the week ahead. All right, so first and foremost, I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut off the video. If you're okay with that, you want to learn, you want to understand what makes something a good trade for me, then continue on, review. Hopefully you guys learned something, and let's go from there. So a little bit different than normal because I'll be looking down at my computer, but UVXY. So UVXY, a lot of people think that if the market goes down, this goes up. And while that is the case a lot of times, meaning a lot of times the market goes down and UVXY goes up, yes, that is correct. However, that's not what it's a product of, right? So UVXY goes up when volatility increases, and it's a multiple of that, 3x, and that's why we have these crazy moves. So you got UVXY, you have VXX, and you have these opportunities to trade these instruments, which is based off of volatility, not the market. So understand that the market actually could go up, and these could continue to go up if people are hedging. But understand that when the market starts to stabilize, it starts to prove that the fear may be gone, these will unwind. So you don't want to step in front of these things and assume that you're going to be right. One of the biggest things about ETFs is none of your opinions matter, because it's a product of something else. And it doesn't matter technical analysis. It doesn't matter any of that. All that matters is what the market is doing. And for me, it's really about the fear factor. And if fear is super high, this thing's going to be super, super high. And as the fear starts to come in, even if the market is still going down, but it's not really in that panic mode, you can start to see this trend a little bit differently. So if you're not familiar with UVXY, don't even bother with it. It's not worth your time, and it's a great way to lose a lot of money. Same thing with TQQQ. Fantastic trader. It's based off the Qs. If you don't know what you're doing with it, avoid it. But you've got TQQQ, you've got SQQQ. And these are great products to trade based off of the tech sector. So rather than trading an AMD or an Apple or Amazon or Microsoft, you can, and you might actually get some better opportunities there. But for me, I really like the daily volatility and range on TQQQ, and I'm glad that they did the forward split, because it's back into a range that you can really scale into and take advantage of. As it gets into the 150s, 160s, 170s, that's great, but one wrong move and too many, and it goes too many points against you. It's just it does get a little crazy up there. So those two, UVXY, if the market stabilizes, I will be looking to fade it. But keep in mind, we do not have any panic mode yet. So when we have panic in the markets, those things start to skip. And that's what you don't want to be on the wrong side of. If you are on the wrong side of it, you're going to lose a lot of money very quick. TQQQ, I like to use more of a technical kind of analysis thought process there. I'd like to wait for higher lows and see things starting to gear up. I like to watch failed follow-through momentum. It's had a lot of nice failed follow-through setups off of VWAP. And if you're familiar with it, great. It's awesome trader. And then F, obviously F was a trade that I've been taking for 2.5 months. And, my process as a trader of getting over it is I'm good with it. I did miss a major trade last week, but for me, and the only reason I am continuing to talk about this is because that is the process that you have to go through, where it's the next mentality, right? So I know that there's a lot of people that were frustrated that maybe they missed a particular trade last week, but it doesn't matter because Monday's Monday. And whether you killed it last week or whether you lost last week, Monday's still Monday. You get to start off the week fresh. And so you want to come in with that mentality. If you're still thinking about what you missed, what you could have done, or why you lost on this, or why you made on that, that doesn't matter on Monday. So focus on that. F is going to be a trade with the markets, so lower the better for a rally, higher the better. And, I'll be looking at, key spots as usual. And it's a little bit hard for me to draw on it this time. But, ideally we get some pops up into this range over here. You can see that it was the prior area of support, which then completely unwound into the close. So we don't know. Did we just have a lot of panic into the close because it was the last half an hour and everybody was a little nervous? Or, is that a real thing that's going to continue on Monday and Tuesday, right? So sometimes everything that happened the last half an hour on Friday, maybe we gap up and we rebound from there. Ideally, we don't. Ideally, we still have a nice opportunity for a nice flush and rally. Next section is failed follow through momentum. You guys know that this is the area where I look for basically retest of prior support levels to confirm that it's going to fail to follow through. And at which point I'm interested in joining that trend. I don't want to anticipate or think that they have to go down. I want them to prove that they are failing under prior spots that were potentially a base, so that I'm on the right side of the trade. I don't want to anticipate being on the right side of the trade. So DWAC preparation on Thursday night was into that 82, 83 level. I mean, that worked out perfect. And it went right into that off the open, completely unwound. You can see this nice failed follow through setup. And again, I just got to reach over here. A little bit of a different setup today for Sunday video. But you can see how it was basing at that particular level. And you can see the failed follow through. All lower highs, finally comes under that. Does not mean that that's an all-in kind of short. Let it come back and test. And it confirmed at that prior support that it's now resistant. So that was fantastic. I'm looking for a very similar setup come Monday. And ideally, it kind of pushes up towards this prior level right over here. Maybe ramps into that level, fails, and ideally we get that failed follow through. Dave is, what appears to be thin. I haven't really been watching this one, so I can't really comment on the intraday action. This is one of those things where, by taking a week off, I don't get to absorb everything. And unfortunately, I didn't get to see how this one was acting, the tape and things like that. But it does look like we've got a decent cover into the close. What I'd like to see is a push over 10. Everybody kind of gets that bailout that had that 10 average, and let it fail. Let it fail. You don't need to find the top. If and when it fails, look for that backside trade. But you don't want to get in front of these, especially if it's a high redemption type of name and there's no real float and too many people sold short. And here we go. We've had it with HLBZ and a ton of other different names. JSPR. They all do this unwind and then just shoot for the moon, and then they just fade off for a few months. So what you can see here, though, is you've got that near 15 million share day on the daily chart. And then you've got the wicks that we talk about each and every single day. So very clean, long setup, liquidity trap. We've got the volume day, consolidates. We've got the wicks coming up each and every single day. And then, away it went. So what I'm looking for on this one is the 10 parabolic, failed follow through. Don't jump in front. PT so far kind of reminds me of RETO. Okay, so both of them kind of in the same category. We know that RETO was the WeChat China scam type of trade. pushing people to buy it. And then as the trade unwinds, there's no bid a lot of times. So it was interesting to see the tape on Friday. There was a lot of huge bids, 350K, 250K, but they were just using that to entice traders into the offers. SSR was on, so they can post those bids knowing that the only people that could actually hit their bids are longs. So that's the risk that they're willing to take, knowing that shorts are going to have to remain on the offer, right? Because they can't hit that bid. So PT, same deal. PT is kind of setting up. It seems like, while there's only so many listed names, they're kind of coming back to old names, maybe buy back a bunch of the float, walk it up. Maybe they have some paper coming due. That's the other thing, lockups, all that kind of stuff. You never really know. Might be 6-month type paper, 1 year, whatever it is. And all of a sudden these things were thin, but now they've got millions and millions of stock to blow. So they walk it up. And then, as you guys know, we've got the big liquidity events that we've seen a million times. Last but not least is BBIG on the failed follow through. I do think that we'll have a rebound of sorts, but I think it's going to be continued pressure. So like we talked about BFRI and RELI and a bunch of the other ones, don't jump in too fast and keep on, add, and then get blown out. Let this thing rebound. But once it starts to fail to follow through, I do think that pressure will remain, and there's going to be some great opportunities. Next section for me is the continuation section. This is more of the long bias type of trade. And, in this case on IMTE, for example, I'm not looking to get long, but I am still bullish on what could potentially happen. And then I'm going to start to stock it for the rebound. So we talked about IMTE the past 2 Sunday videos about the liquidity trap. You guys saw the liquidity trap happen. And that's right over here on this day. It was about 40 million shares, 45 million shares. It never broke that base. You saw the wicks come up. We talked about that. And like I said on the last video as well, don't underestimate it, because the wicks are there. Each day it's getting soaked up. What that tells me is longevity, but also the way that it's trading intraday, there's no blow-off move yet. It's just steady consolidation grind. Just like we talked about on the markets, if the markets continue to fade slowly, that can last a lot longer than you think. Same thing with the slow squeeze. It can last a lot longer than you think because it keeps people in. Keeps people thinking, okay, it's not that bad. All of a sudden they're down another 70 cents. Okay, it's not that bad, down another $1. All right, maybe down another $1. And it just keeps on compounding and compounding. The other thing is this, I don't know if it's perpetual squeeze or what the word is for it, but what we talked about in the room is, you don't know, are shorts letting out the other shorts? And then new shorts are coming in, letting out other shorts. And if you have that happening, then you're just kind of kicking the can down the road to the eventual, oh boy, somebody's in trouble. And then we have that circuit halt, and crazy move. So like I showed you guys the other day, FWP reminded me a lot of this move where we had a huge, very similar situation happen where shorts got on the wrong side of the trade, and it was just this, continual short stepping on each other until the blowout. And it should have never gone that high. And, it was a fantastic trade. I wish I sold it all into the 20s, but, and I wish I held it all into the 20s, but it was a huge short squeeze. So I do think that this is the way that it ends, but as you can tell, you don't want to be figuring out where the top is, because it could be, it could take a while. LLNW, nice breakout chart here, and no position on that. Same thing with VVOS. Nice liquidity trap situation over here as well. So again, just because it has a liquidity trap does not mean that it's going to go. You don't want these things to get long crowded. You can easily go from short crowded to long crowded if everybody anticipates that breakout. So you want to see it kind of prove itself, but it had great volume. And now at this point, as long as it holds maybe over the 240 level, I think that it can continue to threaten. But at this point, be cautious. We talked about, this low volume walk down, right? So really, there was only about, let's call it 300,000 volume back to this level where it's at right now that it walked down on. We talked about this last week. I went over the Watt example, comparing it to BBIG. Same thing right here as to why, you look at it and you think, oh, it's just doubled. It's got to come back in, but it doesn't. And there's a lot of volume there, and there's probably a lot of shorts that are stuck. So keep that in mind. And last but not least, KPTI. And nice daily chart breakout. Again, no position here, but I'm just looking for stocks that actually have some decent setups here in this market. You can see 850 area as a potential breakout on the daily. If it rejects hard, then obviously we can quickly change this to a failed follow through momentum. But for now, it's a nice long setup. I'd be watching for that breakout. Each time it has attempted, it has failed. So keep that in mind. Under the staying familiar section, I have a bunch of other names that are worth kind of seeing, like X, CLF, Snap, DraftKings, RBLX, Fubo is almost singles finally. But all these other ETFs that might interest you guys as well. For me, my job in this market is to scan everything and figure out where the best edge is, and then go forward from there. So those are my main watches. As you guys saw, so UVXY and VIX, typically I kind of trade hand in hand. T, triple Q, and F. But if we start to rebound, I want to start to watch all those other names that I have under staying familiar as potential rebounds. DraftKings or Hood or Snap, all these names could continue to unwind and go to nothing. But the day that the market bounces, a good chance that I can spread my risk across many different names and follow that bounce with those names as sort of my trading vehicles. So nothing that I want to invest in, but they're all, to me, trading vehicles. So that's it. I'll be back full Monday morning. We'll see you in the room. I hope you guys all have a great rest of your weekend. I don't have any Patriots to watch, so I'm full on Buccaneers. Well, Team Brady, obviously. I have been since the trade. I've had two teams. So I'm not a fair weather fan. Unfortunately, my Patriots just aren't in it. So I've got to get behind somebody. And that obviously is Brady. It's been 20 years of my life of football. So I think that's it. See you guys in the room. I'll pick a second t-shirt winner just because I'm all discombobulated with this whole setup and recording. So I'll pick a t-shirt winner, an extra couple next week. But as always, leave a comment. And I'll actually use last weekend's video, the comments for the winner for that couple t-shirts, and then I'll also do tonight's as well. So make sure you leave a comment in the comment section. Leave your key takeaway with the timestamp so other people can go back and check it out, and we'll see you in the room tomorrow.